Hi folks, David Waring here with InformedTrades.com, and today's lesson of the day, the second three tenets of Dow theory. In yesterday's lesson we went over the first three tenets of Dow theory, which are the markets have three trends, trends have three phases, and the markets discount all news. In today's lesson we're going to go over the second three, which is going to wrap up our discussion on Dow theory and going to give us a strong basis which we can then move on to some more interesting things, look at some charts, and move towards placing some trades with our newfound knowledge. So let's get started.
Okay, so tenet 4 is that the averages must confirm each other. If you remember from our introduction to Dow theory, Dow was doing his work on the Dow Jones Industrial Average and the Dow Jones Transportation Index. To understand this one, it's important to understand that during Dow's time around 1900, when he was doing this work, the U.S. economy was a manufacturing-based economy, where today it's a service-based economy. So Tenet 4 is not as relevant today as it was during Dow's time, but still worth looking at. Basically what Dow was saying here is that you should not have a rise or fall in the Dow Jones Industrial Average that is not accompanied by a rise or fall in the Dow Jones Transportation Average, or vice versa. So basically the reason why he's saying this is that the manufacturing companies, if they are producing more goods and are more profitable as a result of that, then the companies that make up the Dow Jones Transportation Average should also be more profitable, because they are the ones that are shipping the goods that are made by the manufacturing companies. So what he's saying here is if there's a divergence in these two indexes, then it's a signal of a pending change. And if there's not, then it's a further confirmation of the trend. So you can see here confirmation. If you follow the line up, they're moving together. You can see there, if you follow the line across and up, that they're diverging there. So again, not too relevant today. Tenet 5 is that trends must be confirmed by volume. So this one is still very relevant today, and something that technical traders place heavy weight on normally is looking at volume in conjunction with their trend analysis. What Dow is saying here is that there's a lot of reasons why price can move on low volume. One trader could come in the market and jerk the price around. It's impossible to tell really, but if the price increase or decrease is accompanied by large volume, that means there's lots of participants in the move, and therefore that's a further confirmation of the trend that's in place. So you can see here, chart of Google, you can see the uptrend there that's in place. Initially it's on rising volume, and then it continues to rise, but on falling volume. So without looking at any other information, just looking at Tenet 5, we'd have to start to call this trend into question. It actually did sell off shortly thereafter. Tenet 6 is that trends exist until definitive signals prove that they have ended. And this is kind of where the debate of technical analysis and the study of technical analysis take us, in terms of trying to determine what those signals are that prove the trends have ended. So we're going to look at that in the lessons that come. Specifically in the next lesson, we're going to look at support and resistance, and look further into trends and price action around certain levels created by supply and demand imbalances. So I hope you'll join us for that one. That's it for today's lesson. If you have any questions, please feel free to visit us at InformedTrades.com or leave them in the comment section below. And have a great day.